Hello everyone, thanks for joining us today and welcome to this presentation of what to do once you're in the trade. Now many times I will meet traders when I'm speaking at conferences or even as I'm talking in webinars who will say, Steve, I have a method or a trading technique that works some of the times, but a lot of times it won't work and I don't know what to do once I'm in the trade. How do I react? Here's a perfect example. Let me show you what this looks like. This is an older example, but it doesn't matter. It could happen today, actually. This came out, the Fed hikes the key interest rate for the first time in nearly a decade. So obviously this is perceived as some very good news. They raised its benchmark short-term interest rate for the first time in 9.5 years. And so someone would looking at that and say, well, you know what? Here was the actual day that they came out in the industrial average. So the market went up on that news and closed near its high. So that fits all of my parameters in my strategy. So I'm going to buy. So let's say you bought, you went long your favorite stock or maybe an option on the indice or whatever you're trading at the point in time. But whatever you're trading, you take it from a long bias. And then let's see what happened the very next day. Well, the market went straight down for the next 2 days actually, and it was making new lows. So let's say you got out, you said, you know what, for some reason it's not working, so I'm out of the trade. You stopped yourself out or you just exit at the very low, and then look what happens. The very next week, the market is flirting with new highs. So this is what happens oftentimes to traders. They'll say, you know, I'm in the trade and I don't really know what to do because once it's in place, all my parameters were meant to get in either long or short, but then I'm really at a loss as to how to manage it. Well, we're going to be discussing that today and ways in which you can manage your trade, regardless of what strategy it's based on or technique, because I'm going to be sharing things that are in one of our courses, one of our 7 Secrets of Money Management courses. As well, I will give you examples in tune with a very, very powerful and prominent indicator and tool we have at Specialist Trading, and to show you how you can really ramp up your odds for consistency when applying these two things together, and you'll know what to do once you're in the trade. So welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading. And just in the few brief moments that I spoke about, you can see that we give a lot of attention and detail to teaching you how to trade. We're not just a company that just spits out signals for you to blindly take without any regard for what they're based off of or some advanced indicators. We really want to teach you how to become a part of the process so that you can ultimately put the power back in your hands. Because in my nearly 40 years of trading, that is what I have found is the only really true remedy for success. It's by becoming a part of the process and by making your own trading decisions. I mean, look at it right now. I can almost venture to say that the majority of you make your trading decisions based off of what someone's saying in a chat room or a trade room, or based off of some news event that comes out, or earnings, or based off of what the institutions are telling you what to do. And if you look at it, and you look at it closely, you'll see that all those decisions are based off what someone else or something else is doing. But it's not based off of what you want to do or what you have experienced through your own research and knowledge. So what we do is provide all of our students and members all of the things I've accumulated in my nearly 40 years. I started trading on the floor of the Pacific Stock Exchange nearly 40 years ago. I was a specialist on the floor. That's where you get the name Specialist Trading. And a specialist just simply made markets in roughly about 50 stocks. So I made markets during the market crash of 1987 and the bull market that followed. And around 7 or 8 years ago, I teamed up with Pro Trader Strategies, and we formulated Specialist Trading, where all I do is teach and mentor my students all the things that I have accumulated along the way in my own career. And these things have been able to sustain me for nearly 4 decades. So this is what I teach and mentor all of my students. So once again, we are not like other companies where we just say we have the perfect strategy, we have the perfect system, we have the perfect time frame, the perfect market. We really don't believe in that. We believe that that's up to you to decide. What we give you are the tools and techniques that have stood the test of time, and we mentor you along the way. Now, once again, I'm going to share with you really some insightful things that really will work, and you can start applying as early as today. But before we begin, we are required to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these 4 simple techniques to apply once you're in the trade. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Once again, we are required to show you this. So as you're taking a brief moment to view our disclaimer, I would also like to invite each and every one of you to follow us on Twitter. If you haven't done so by now, you may want to copy down our handle there. It's at SPCLSTTRADG. I post insightful and informative information on a daily basis, anywhere from financial wisdom to things that are setting up by using some of our different tools and educational resources. Although Twitter is rather limited because of its format, if you'd like to get more educational information, see some educational videos, my sister site, once again, Pro Trader Strategies, has a Facebook page, and there's a lot more information about myself and about Pro Trader Strategies and everything we teach and do there. So you can go onto Facebook and log on to Pro Trader Strategies, okay? So there's lots of ways to get information about what we do, lots of ways to see some more educational videos as well. Now, as I stated, we are first and foremost an educational company. It's not our goal. In fact, we think it's counterproductive just to force feed you signals. Even though we provide our students and members with strategies that create and generate signals, we have a number of ways to trade them, and we teach you how to trade them to meet your needs. So no one, we believe, should ever trade the same as someone else. No two traders should ever trade alike because everyone has to become a part of the process. Some traders trade conservatively, others trade aggressively, and this is what we encourage. We want you to make your own decisions. Once again, in my nearly 40 years of trading, this is what I have found through seeing thousands and thousands of traders. This is the only thing that will make someone consistent, okay? So this is what we try and instill in all of you. As you can see here, as an educational company, my goal is to teach you, not to trade for you, but to teach you how to trade with the specialist edge. This is the same edge that was able to turn my trading around, and I believe the same edge that has been able to sustain me so that I can trade for nearly 40 years. All right, so one of the things I just want to say before we begin today's presentation is I know you may have some questions. Kindly wait till the end of the presentation to ask the questions. I know some things may not make sense or whatever, or they may be a little wordy. Don't worry. Often if you wait for the next slide, your question will be answered. But if you do have a question, kindly wait to the end, and we'll reserve the last 10 or 15 minutes for the presentation to answer all your questions. The one question I will answer is the most popular, and is this being recorded? Yes, it is. So if you have to leave early or if you're having technical difficulties, you can request a link to this recording from Pro Trader Strategies, and then we'll send it to you. Okay? All right, so let's begin today's presentation. And I want to start out by telling you the number one question you should never ask, because most traders say this, and think of your own trading when I state this, what this is, but the number one question you should never ask whenever you're trading, regardless of what market, regardless of what type of a trader you are, regardless of how long you've been trading, but you should never, ever ask, what do I do now? I know a lot of you would say, well, Steve, I never do that, but think of it. You may not say, what do I do now, but even if you call up other traders and say, well, what do you think of the market? Or what do you think of this stock? You're basically saying, what do I do? Because, you're sending a message to the market or whatever market you're trading. I don't know what to do. Now think of that. Trading is a business like anything else. It's extremely important. It's your hard-earned money that you've worked and saved for. And can you imagine asking yourself after, saving and earning this money, what do I do? I mean, you don't want to, throw away your money when you get to a point there. I mean, imagine someone flying a plane. If you're on an airline jet and you're going from LA to New York, you don't want to hear your pilot say, well, what do I do now? Okay, I've got the plane going, we're up in midair, but what do I do now? Or a brain surgeon, you don't want him, the minute he's opened you up, saying, well, what do I do now? Okay, I realize that I've opened up the cranium, but now what do I do? It's no different with trading. You should never ask yourself, what do I do now? Because think of the message you're sending. You're basically saying, I have no idea what to do. And just like all of those other professions or studies, a trader is no different. You should never be saying those things. So if we have to ask questions, here is what I have found in nearly 4 years are the only things you should ever ask. And these are the things that will help you manage the trade and decide what to do once you're in the trade. Please remember, it does not matter what strategy you're using. You can be using one of ours, one of yours. It can be based off of news, indicators, patterns. It can even be based off the tides of the ocean. It really doesn't matter, but you should ask yourself these questions prior to entering into any trade. And here they are. Question number one, ask yourself, am I on the right side of the market? And you should ask this prior to entering the trade. Now, I would venture to say 99.9% of all traders always think they're on the right side of the market. They think they're doing the right thing. then why do upwards of 80% of all traders fail? When I say fail, I don't mean you have a small series of losses. I mean you lose everything. Well, here's why I think that may be. Let's look at this older example in MCK. All right, let's say your strategy, once again, whatever it's based off of, generates a buy signal here, okay? But before you buy, before you enter the market, regardless of where or how or when, you have to ask yourself, am I on the right side? Now, of course, your strategy may say you're on the right side, but the main way we know that we are on the right side of the market is by adding a simple, powerful, and free tool. It's the 50-period moving average. You've heard me talk about this thousands of times, but it's so powerful, I cannot stop talking about it because I want to stress this into all traders. If you have a buy signal, regardless of what strategy, you must enter above the 50-period moving average, because over time, the odds will be in your favor that trade will work out. You will have consistency. Now, unfortunately, most of us trade the opposite way. We've been taught to trade the opposite way. We sell when we're above the 50 and we buy when we're below. And that's why most traders fail. But ask yourself, before you enter into a trade, am I on the right side of the market? If you get a buy signal, your entry must be above the 50 period. If you get a sell signal, your entry must be below the 50 period. That way, over time, you will have consistency in your trading that will be able to sustain you 10, 20, 30 years down the road. Okay? So in this case, we are on the right side of the market, but we can't buy just yet. Question number 2, we have to find out what happens if we're wrong. What happens if it doesn't work out? Because just because we're on the right side of the market does not give us any guarantee. We all know that there are no guarantees in the market. So where do we place our stop if we're wrong? Where are we going to be getting out? Okay. By stop, I mean that I know that certain markets do not allow you to place stops anymore. But if you're watching markets, where do I get out, in other words? So as we can see here, that's where our entry is going to be. And one of the most common places to place a stop is just below the short-term previous low. Now, in our courses, in our programs, we have upwards of 5 or 6 different stop placements for different types of traders, okay? And this is what we teach in our courses. But one of the most basic and standard is just below the previous low if you're getting long. So that's where you want to exit the trade, all right? Now, as we look here, we know right off the bat, if we're wrong, how much we're going to be losing. Now, most traders never come up with this prior to entry. They always say, well, if I'm wrong, I'll kind of cross that bridge when I get to it. That's the wrong way to trade. You should know that in advance of even entering the trade. So we haven't entered the trade yet, but we know if we're wrong, we're losing 5 points. Now, right off the bat, you can say, well, that's too much for me. That's too large for my account. I don't want to trade an odd lot, and I wanted to trade a little bit more, and I can't risk 5 points. Great. So now you know you'll move on to something else. There's plenty of setups happening all the time, so just move on to one that meets your needs, all right? But if 5 points does meet your needs, if you're able to handle that with your account size or your style of trading, fine. Now we go on to question number 3 yet. And remember, we still have not entered the trade. These are all questions to ask prior to entering the trade. Where is my profit target? Now, once again, our courses, we have numerous different ways to exit a trade. We have static exits, which mean that they are fixed, that we know prior to exiting where we're going to be exiting. We also have dynamic exits, where they're based off of some type of movement in the market, whatever we're following. So we don't have an idea yet. We have to wait for the market to tell us when to get out. One of the most standard and basic ways to exit a trade is simply to base it off of your risks. So if you're willing to risk 5 points, a lot of people like to use risk-reward ratio as their exit. So if you're willing to risk 5 points, you want to at least double that as your exit. So in other words, you want to make 10 if you're going to be risking 5, okay? Now, over time, a lot of people believe that that will guarantee some success or consistency. So this is very standard, very basic. Remember, I'm just using generic rules here. You can apply any type of exit placement you want, but you have to know where that's going to be in advance of the trade. You can't just decide that once you're in the trade. Just like, once again, you can't say to the market, what do I do now? You need to know these things prior to even entering the trade. So if we're risking 5, well, then we'll make double that. We want to make 10, and that's where our exit point will be, up 10 points or at 201. Okay, so we now have all our parameters in place. We know where we're going to buy. We know where we'll exit if we're wrong. We know where we'll exit if we're right. So let's say we enter into the trade. Now, one of the worst things that can ever happen to a trader, myself included, it's happened to me, is to have a trade going in your direction, in your favor, and then all of a sudden stop and reverse, and you had a winning trade that now turned into a losing trade. It's the worst feeling in the world. I would venture to say that most traders would rather enter into a trade and then lose right off the bat, as opposed to enter into a trade, have some profits for a while, getting ready to exit, and then it just reverses, and now what you thought was going to be a profit turns out into a loss. It's a terrible feeling. So you have to ask yourself, how can I protect it? Even though I haven't exited yet, how do I protect what I've gotten so far? All right, so if we're entering at 191 and our exit is at 201, that's a profit of 10 points, correct? Because we have a standard fixed exit. What we want to do is, this is just once again one of our many ways of protecting. We have different ways to protect, but here's one of our standard. If we go half the distance to our exit point, we will then move our stop to unchanged. This means that if it runs out of gas, if we don't seem to have enough energy to exit at our desired exit level, well, at least we'll break even. So it's a much better feeling going to sleep at night knowing that you didn't lose any money, as opposed to knowing that maybe you had $500 or $1,000 profit turn into a $1,000 loss. So as we watch the trade unfold, we're in the trade and it starts to go in our direction, but we're not at the halfway point yet until right here. So we decide to move our stop from this point up to here. So once again, as I stated, if something happens, some news comes out, or if the stock just runs out of gas and starts to head lower, well, at least we break even. Now, what a lot of our students like to do is perhaps sell half the position right here and sell the remaining half up here. That's okay. As I stated, there is not one way to trade anything. And in fact, you should never trade the way someone else trades. Trade what makes you feel comfortable. That's how you will become consistent. So many traders say, Steve, I feel more comfortable if I sell half my position or a portion of it at the halfway point. Fine. Where other traders would say, well, Steve, no, I don't mind being in for the long haul. I'll keep everything at my exit point. That's fine. There's no right or wrong way. As long as you have the standard parameters in place, there are 1,001 different ways to execute, which are all totally admissible. The only sin in trading is to trade and try to mimic someone else. Once again, that is a recipe for disaster. But unfortunately, it's the way we've been taught to trade. We go to a chat room, we go to a trading room, and we try to mimic what someone else is doing. Or we listen to the TV gurus on TV, and they give us all their recommendations, so we buy or sell whatever they say. Or, we have a subscription to a website, and they generate signals, and we take those blindly. Remember, once again, this is why, in our opinion, most traders fail, is because you're taking your cue from someone or something else. But once you know how to trade, once you know what to do on your own, you can make your own decisions, get on that road to consistency. Plus, you'll save yourself a lot of money because you won't have to rely on paying for these outside sources, which personally I used to do myself some 40 years ago. I used to buy all the newsletters and listen to all the gurus, and it couldn't make me a dime. So my mentors taught me to let go of all these things. They called them useless noise, and that's when I started to become consistent. So this is the same thing I teach all of my students. So we're at the 50% level. So let's say you decide to move your stop up to unchanged, okay? So you're not risking anything. At worst, you'll probably just break even. And let's watch the trade unfold. But before we do that, we have to say, well, what do I do now? Well, there's nothing left to do. All you have to do is just watch the trade unfold. I've often stated to my students and in my seminars, if you are trading correctly, it's very boring. It's like fishing. If you're fishing correctly, you're just most of the time just waiting. You've cast your line, you've done all the preparation, and you're just sitting in the boat waiting. It's the same thing with trading. You've done your preparation, you've put all your orders in, you've monitored the trade, and you just sit and wait. And that's the way trading is. You don't need to have 10 screens in front of you. You don't need to be watching hundreds of markets at a time. You don't need to be looking at different time frames or have 2 TVs going on. It's boring. Just sit, monitor it, and then read a book. There's nothing left really to do. So as we see here, we're at the halfway point, and things are continuing to go up. So it looks like we're going to have a profitable trade, and then ultimately we exit with 10-point gain. See how simple that is? And also how boring it is? There's no reason to be picking up the phone, yelling and screaming every 5 minutes. I mean, that's silly. That's something that we saw in the movies, but trading should never be like that. Trading is very, contemplative. It's very quiet. It's very structured, and it's very disciplined. When you're disciplined like that, trading can appear as if almost as if you're not doing anything. Think of the airline pilot again. Do you see him screaming and yelling? Would you want to walk by and see him screaming and yelling and doing 20 things at a time? No. It's very mechanized, it's very structured, and that's the way it should be. Same way with a surgeon. Same way with trading. All right, so let's look at another example, okay? Once again, we're going to apply the same parameters, but look at an entirely different example here. Let's look at Tiffany. And once again, for the people that may have joined us a little bit later, remember, if you happen to have any questions, kindly wait till the end of the presentation, and I'll go over any question you may have then. All right, here's an older example in Tiffany, okay? Let's say you don't really rely on gurus or trade rooms, but you love technical analysis, and you most especially like uptrend and downtrend lines. That's the way you like to trade. Okay. Well, as we look at this example here, you say to yourself, well, you know what? I see right off the bat that this is a buy signal right here, okay? Now, why do you think that's a buy signal? And you could say, well, I like to look at trend lines, and we've broken a very significant short-term trend line here. And on top of that, we have some amazing support at this level, okay? So let's say the institutions are buying right there. Let's say all of the Fibonacci support and resistance lines all meet up there, or let's say it's something with the Elliott wave. Everything comes into place, and so you've just broken out of that short-term downtrend. Meets all your parameters, so you jump in and buy, okay? But remember, we have to ask ourselves the first question before we buy. This may all seem well and good, and trust me, I know this from personal experience because this is the way I used to trade on the floor when I couldn't make a dime my first 2 years. Okay, I would think everything's perfect, everything came into play, but I didn't ask myself that first question, which is, am I on the right side of the market? Remember, this is not guaranteed to always give you a winning trade because nothing is guaranteed to give you a winning trade. But it will give you that consistency. And consistency is the only thing that will sustain you. Not a winning strategy, not a winning system, not even a winning teacher. Okay? The only thing that will generate your consistency is some type of tool or methodology that has the odds in its favor. So ask yourself, am I on the right side of the market? So how do we do that? If we want to buy, what did we say earlier? You have to be above the 50-period moving average. This is a simple, powerful tool, but it really works so well. You can start applying it today. So let's apply the 50-period moving average. Should we be buying this stock? Absolutely not. We're below the 50, and odds tell us that most likely we will lose money. The overall trend is down. Remember, if we're below the 50, we should be selling, not buying. So let's just say you didn't know this rule, or let's say you did. You said, well, I don't listen to that Steve Primo guy. He doesn't know what he's talking about. And you buy anyway, even though we say not to, and look what happens, okay? Most likely you're stopped out. You went below the previous low, and you say, boy, maybe there's something to this. Or maybe you didn't take the trade, and you're saying, boy, I'd really dodged a bullet there. Thank goodness I learned this rule, and I didn't take that trade, all right? But you still like your strategy, and so you wait for the stock to unfold, and you see that you're starting to bounce here, but for all intents and purposes, the bars are still below the 50-period moving average. And you see a nice uptrend line there that was just broken. So this actually does meet your parameters to sell. You want to sell here because you're below the 50-period moving average, and you broke that trend line. So there's nothing wrong with this. This is fine. So this is okay. You're on the right side of the market. Now, does it guarantee that this trade is going to be a winner? Absolutely not. We're just trying to put the odds in our favor. That's all. Okay, so we're on the right side now. Now, question 2. Where do I place my initial stop? Remember, once again, we have not even entered yet. We're asking ourselves these things prior to entry. You must ask yourself this. Now, looking at this, we want to enter at this point right here. We could place our stop way up here. This would be a very assured place that most likely we wouldn't go all that way up. But even if we did, we would lose 5, 6, 7 points here. That's a little bit too much for us. So we're willing to place our stop right here above this little double top, okay? And after all, we would be above the 50-period moving average. There's no reason to wait all the way up here. So we'll place our stop just right here, okay? Now, question number 3. What is my profit target? Remember, once again, we still have not even entered into the trade. Now, using the same generic example of the risk-reward ratio, if we are entering here and our stop placement is here, well, what's our risk? 3 points. That's more like it. We can afford that, okay? Before, if we had placed our stop up here, that's a little bit too much, for our liking here. We can't risk that much in our small account. But we can risk 3 points of however many shares we want to trade, okay? So if we just want to use this standard generic exit, which is twice our risk, well, if we're risking 3, then we want to at least make 6. So if we go short here, either by trading options, we could get some type of puts, or we could, if we had an account size large enough, we could actually short the stock, whatever we want to do. This is where we would cover when the price of the stock get down to 70. Okay? So all the parameters are met. Okay? Works out fine. So we can go short. And over time, over a little practice, you'll be able to do this in just a matter of moments. It's not something that you have to take an entire evening to figure out. This is something that you'll be able to over practice, be able to do in just a matter of seconds. All right, so now that we're in the trade, if it starts to go in our direction, how are we going to protect it? Well, once again, let's just use the standard 50% level. So if we short at 76 and we want to exit at 70, well, that's our halfway point, roughly about 73. So let's watch the trade unfold. As we see here, well, it starts to go in our direction. So things are looking great, but we just want to make sure that we protect ourselves. And as it's going lower, we finally reach that halfway point. So this is where we will now lower our stop to break even, because we would hate to see all of a sudden a nice rally start and then we turn this into a loss, and what was now a 3-point gain turns into a 3-point loss. We gave away 6 points right there. So we move our stop down to break even, roughly where we got in. All right, now once again, I know that because of the markets, the way they're set up now, you can't place stops certain markets. If you're trading futures, you can, or currency pairs. Stocks, you have restrictions. So this is just something to keep in place. Keep in mind that if we get to this point, that's where you want to exit. So our mental stop is at break even, 76, and we still have our exit limit here at 70. So let's go on to the next thing, which is basically to sit and wait. The only thing left to do is watch the trade unfold. We don't need to look at any news and see what the earnings are going to be. We don't need to see what the job placement report is. We don't need to see what some trading guru is saying in a chat room or a trading room. Remember, those are all outside sources that will only serve to put you in the wrong direction. Just listen to the chart in front of you and you'll have more consistency than those other things. Because trust me, if those things had such a high level of consistency, then why do most traders fail? Okay, and ask yourselves, how well have they worked for you? How well are they working for you at all? All your years you've been trading, so are they doing that much justice to your trading? Have they helped improve your trading? If they are, well then great. Then you probably join the ranks of the 10% or so, which it helps. But the rest of us, myself included, the 80–85%, those things didn't help our trading. So only listen to the market in front of you, the chart in front of you. So now that we've protected ourselves, we just sit and wait and watch the trade unfold. Either we're going to break even with a stop, exit at our entry point, or we're going to have a profit of 6 points. So we just wait like a fisherman, and ultimately we exit in about a week's time with a 6-point gain. You see how trading can be very structured and very simple, and as I stated, very boring if you apply parameters. But the trouble is, most of us don't want to apply parameters. Most of us want to listen to someone and have someone tell us what to do. Remember, you should never ask yourself, what do I do now? You want to know exactly what to do. It's not a guarantee that it'll work out, but at least you've put the power back in your hands. Now, a lot of people say, well, Steve, how can I increase my odds? Because sometimes I'll get out of a trade too soon. And I use these parameters, but wow, I make a couple of points and I could have made maybe 20 points. Well, you've heard me talk about this great tool here, which I mentioned earlier, the ATTENDEE. This is a tool I was introduced on the floor nearly 40 years ago, and I use every day in my trading. In fact, I used it this morning prior to trading, and I made about 3 points trading the E-mini S&P while I was going up, and I got out before the market fell out of bed. I use that applying the PET D. Let me show you how this works. There's a number of uses for it, but please let me first describe what it is. It's a color bar tool designed, firstly, to confirm your entry signals. So you want to see the correct color with whatever you're doing. If you have a buy signal, you want to see the color green in your buy setup. And if you have a sell signal, you want to see the color bar turn red. That's confirming your signal that you're in sync with the short-term trend. And it also will keep you in winning trades. If you like to stay in trades much longer, rather than take 2 or 3 point gain, you can sometimes, not guaranteed once again, but sometimes stay in a trade to gain 10, 20, even 30 points. Let me share with you some examples here. Here's an example in HRL. Okay, now this is using the same parameters we talked about. Nothing is different at all. We're above the 50 period, so we're on the right side of the market. Okay, here's our buy setup. I believe this is one of our strategies, strategy number 5. Okay, we placed our stop, the generic stop right below. Okay, so we know this is where we're going to exit. And this was our standard exit right here if we get a profit. Now here's where we exit for a loss. Here's where we exit with a profit. So as we can see, this trade worked out very well. In just a week or two, we made nearly 4 points. Not bad, okay? Very simple, very easy, very structured, and as you can see, can be boring too, all right? But what if you say, well, Steve, I want to stay in this trade longer. Well, here's how the PET D can help you. First of all, remember, the first application of it is to confirm your signal. So prior to anything, if you get a buy signal right here, you want to see that this bar is colored green. It does not matter what the color of the bars are prior to it, but as long as this bar is green when the signal has been generated, that's giving you the added assurance to take the trade. So if we apply the PET D, we see here that this bar was colored green. You see how we have a couple of red here, a green, a couple more red, some more green. But as long as this bar is green, that gave you the confidence to take the trade. All right. Now, what if you wanted to stay in the trade longer? Well, once again, here's what a lot of our students will do. They will exit a portion of their position at the standard exit, and they will let the remaining portion of their position ride. And what do we mean by ride? Well, you continue to track the stock, and if all the bars continue to be green, you're still in the trade. On the very first red bar that appears, that's your exit point. Now, had you applied that to this example, you could have had an additional 11.30 points, okay? Once again, we're not saying that this happens all the time, but if you have a really strong feeling about a particular issue that you're trading or a future, you can apply this to keep you in the trade much, much longer. Here's looking at another example, MANH. Okay, we were originally above the 50 period, but now we are below it. In fact, we have 1, 2, 3, 4, 5 bars below, and here's our sell signal. So we're on the right side of the market, okay? And we knew this is where we wanted to exit if we were wrong, just above the 50 period, above this short-term high here. And here was our measured exit. And so in just a couple of weeks, 2 or 3 weeks, we made nearly 5 points, 4.5 points, okay? Not a bad trade, once again. But how could the PET D have helped us, at least in giving us more confidence to take the trade? Because I know a lot of people would say, well, Steve, we're only below the 50 period for about 5 or 6 bars, and the 50 period is still rising, so how would I have known to take this? Well, remember, there are no guarantees in trading, but there are only things that can increase our odds for success. And one of them is by adding the PET D color bar tool. So if we had a sell signal, we want to see that that bar was colored red. So let's apply the PET D, and we can see that as far back as here, a week or so ago, the bar started to turn red. So this was the PET D telling you that it's okay to take this short-term trend trade to the downside because it's in sync with the short-term trend. All right, so you could have once again opted out for just a quick 4.5 points, but let's say you wanted to stay in the trade longer. Well, remember, as long as the bars are red, you're still short. So you could have taken half your profits right here and let the rest ride. And up until this chart was taken, we still had not had an up green bar. So you're still in the trade with an extra 15 points. Okay, you see the beauty of this? It will keep you in the trades that have these large trends. Here's another example, PSA. Now we realize this is a very expensive stock, but you could have applied options to this. Remember, you don't have to trade stocks all the time. You can trade futures, you can trade currency pairs, you can trade options. So whenever a signal is generated, instead of actually purchasing the stock, you can just purchase a call or some type of long call strategy, okay? Now here was the buy setup right here. I know we don't have the 50 period, but you can just barely make it out. We are above the 50 period, so we're on the right side. Here's the buy signal. And in just about 3 or 4 days, you exited with a nice nearly 7.5-point gain. All right. In order to have the assurance to take that signal, we want to apply the PET D. And once we did, we see that the PET D colored this bar green. So it was telling us it's okay to take this. So you could have taken that signal at 229.30, exited at 236.70. Now let's say you wanted to stay in this trade longer. Let's say you really had strong feelings about this. This is what a lot of our students do. They say, well, Steve, I love your stuff, but it gets me out sometimes too early. Okay, just apply the PET D. And if you want to, you can either stay in the trade or exit with a portion of your position here with a nice 7.5-point gain. You could have moved your stop to unchanged and then track the trade. As long as the bars are green, you are in the trade. And you would have exited on the very first red bar, which would have generated an extra 18.5 points in your favor. Okay? As you can see here, the PET D is a great tool because even when you had these sharp downward days, guess what? The bars still were green. So even though we had a couple of down days, the short-term trend was still up. The PET D was saying it's still okay to be long this. And then you had a couple of 2 or 3 down days here, same thing. It was still saying it's okay. It wasn't until you got to this point where you had some down days and we turned red that the PET D was saying, you know what, it looks like the trend is going to change. You might want to get out here. Now here's a great example of how the PET D can keep you out of trouble. Once again, not guaranteed, but it will keep you out of trouble. Let's say you just say, well, Steve, you know what? I don't really need the PET D. I'm going to use your 4 questions that you say, though. I think those are really good and they can really help me. They will help you. They'll apply structure, and they will be the 4 questions you should ever ask yourself. But remember, as I've stated numerous times throughout this presentation, there are no guarantees. There are only things to help us increase our odds for consistency. Because as we look here in this older example of eBay, where are we on the right side? If we have a buy setup right here, are we on the right side? Yes, we are. We're above the 50 period, so that meets the first question. The second question is, where's our stop? Well, our stop is right here. That's okay. That's below the short-term low. Okay, so this is where we're going to get out if we're wrong. Now we simply want to double that. Okay, well, our exit will be right here, and here's our 50% halfway point. We'll move our stops. We're all set. We're all set to go, but the only thing is we didn't apply the PET D. The PET D will give us the assurance to take the trade. And if we see, all the bars were red. So the PET D was telling us not to take this trade because the short-term trend was down. Now, even though the overall trend was up because we were above the 50, the short-term was down. We need these two to be in sync with each other. So we would have not have taken the trade, and it would have been a good thing. See how the PET D would have kept us out of a losing trade. So this is the beauty of applying these things together, using our money management tools, which I just shared with you, just a portion, a small tip of the iceberg, along with the PET D. You can really increase your odds for consistency. And you will never have to ask yourself, what do I do now? Because the power will be back in your hands. So before we go to questions and answers, let's review, okay? Here's what you learned today in our educational course. Remember, once again, we are an educational company, and you see how much attention to detail we give to trying to educate you. The number 1 question you should never ask, and please, if there's one thing you get out of today's presentation, you should never ask yourself, what do I do now? And remember, even though you perhaps have never said those exact words, every time you ask another trader, or every time you listen to some trading guru, or every time you go to a chat room or a trading room, you're basically saying, what do I do now? Because you're asking advice from someone. You want them to tell you what to do. So even though you don't have to actually say those words, if you visit a trading room, if you listen to some trading guru, or if you wait for the news to see if it's good or bad, you're basically saying, what do I do? Tell me what to do. You should never do that. Trust me, take it from someone who's been there before. It doesn't work. There's no level of consistency in listening to those things that will help you. So the only questions you should ever ask are the 4 questions we taught you today. Am I on the right side of the market? How do you know if you're on the right side of the market? You simply apply the 50-period moving average. If you have a buy signal, you should be above that 50-period moving average. You should never buy below the 50. And if you have a sell signal, you should be below the 50. You should be never selling above. over time, this will increase your odds for success tremendously. Trust me, in fact, go back and look at your last 10 or 20 trades. I can almost guarantee the reason why you've lost in certain trades is because you are buying below the 50 and selling above. Go back and check it out. The next question, where do I place my initial stop? It's so sad, but most traders never even look at where they will get out if they're wrong. Or then maybe they have a mental idea, and then once they get there, they say, well, you know what? The market really doesn't feel that bad. I'm going to stay in here. And then what was a small minor loss turns into a major investment. Now you've turned something in that you only wanted to take a small swing trade. You've now turned into a long-term investor, okay? So you have to know where you're going to get out, and you have to stick to it. Then once you know how much you're willing to risk, then you know where your profit should be. So you ask yourself, where's my profit target? Is it good risk-reward ratio for it? Or do you even know where you're going to get out? You know, once again, most traders say, well, I don't really need to know where I'm going to get out because I know this is going to be a winner. I can just feel it. That's a gambling mentality. That's no different from someone saying, trust me, I know this horse is going to win. I feel it. You know, you have to have a plan. This is not gambling, okay? And then lastly, how do you protect your profits? You should have some plan in place that knowing that when you have certain profits, you at least will move your stop to unchanged or at least scale out of some. Now we have, different techniques and methods for all of these. I just shared with you, as I stated, the tip of the iceberg. These are just very small, unique ways and very generic ways of protecting yourself. But we go much further into detail within our courses. And then lastly, if you really want to ramp up your odds for consistency, apply the PET-D. Increase your odds with the PET-D because it's one of the best tools I've ever used because it tells you what the short-term trend is. And if you want to verify a signal, it will confirm it, either confirm it or non-confirm it for you because it will color the bar either green or red. Remember, if you get a buy signal, that bar must be green. And if you get a sell signal, that bar must be red, okay? Combined with the other 4 things I just taught you, you'll really increase your odds for success. And then if you want to stay in the trade much longer, if you really feel confident that it's got much more room to go, well, you can exit a portion of your position or at least stay in the trade as long as you want until the color bars change, okay? So it's a great tool. I've been using it myself for nearly 4 decades, and I wouldn't trade without it. Okay, so before we go into questions and answers, I want to talk about your special attendee discount today. This is for everyone attending today. Now, what I gave you, those 4 questions in the structure, they are a part of our 7 Secrets of Money Management course. I mean, most people, if you think about it, just rely on what the strategy is. Well, how do I buy? How do I sell? But really what trading is about managing your trade. It's about managing your money. And this is a tremendous course. These are all the things I've accumulated in nearly 40 years of how to manage your money, how to manage your trade. And you can apply this to any strategy you have, okay? You get instant course access, detailed instruction. We tell you 6 different stop placement techniques. I give you the RPS method, which is a method for determining your position size, either if you're trading stocks, futures, or currency pairs. We go into risk-reward ratios and how to increase your odds in those ratios. ATM, which is advanced trade management. It's a great formula for telling you when and when not to trade. And then you also have lifetime personal correspondence with me. But we're not stopping there. We're also throwing in the PET-D, all right? Remember the color bar algorithm. It's a roadmap for any market. We really feel it's a roadmap for consistency because it gets you on the right side in the short term, okay? This also comes with 2 continuation trading techniques, 2 pullback techniques, a trailing stop technique, okay, and as well lifetime correspondence. Now these 2 courses are extremely powerful. And as you can see here, what I just showed you today is just a very small example of how powerful and how much they can help your trading. Now, if we just bought these separately, okay, this is our money management combo. If we just bought these 2 things separately, it would cost our members upwards of over $5,000. That's how powerful they are. But we're dropping the course price today for all the attendees. You're going to get both of these down to $39.95. Plus, we're including, for a limited time only, payment plans. Though we realize not everyone can come up with that sum right off the bat. You can put down a small deposit and still get access to both these courses with a payment plan included. Okay, so if you really want to increase your odds for success, become a lifetime student of mine, here's how to do that. Contact Pro Trader Strategies, their email address, as well as phone number, And as you can see there is the link at the very bottom that will take you to that sign-up page. But it's not a live link. You have to copy and paste that. But if you look over in your chat box in the far right-hand corner, you'll see that they have posted a live link, and you can simply click that on for more information. And I would suggest to all the attendees today to contact Pro Trader Strategies about a payment plan, because remember, we are realizing that not everyone can come up with that lump sum, so that's okay. We can structure a payment plan with you at Pro Trader Strategies. They'll work with you, and you can be up and running in moments, okay? So I'm going to leave this information up for you as I go and answer all the questions that you may have. You give me a moment to open up the question and answer box, and I want to thank you for holding off on any questions as well, okay? Let's see, first question is, what are your rules if you're using options in terms of exiting and profit target? That's a good question, Joel. Well, what we like to tell our students that trade, in fact, we have a number of students that just trade options. What we do is we say, listen, if you're applying a strategy, it's just simple. When we give a buy setup to a particular strategy that we teach and you use the entry point that you'd like to apply, instead of purchasing the stock, all you do is just simply purchase the option. Now, it can either be an option strategy, it can be an actual long call or a long put, it doesn't matter. It's up to you, but just instead of clicking the button to buy the stock, you click the button to buy the option, okay? And conversely, when you get to the exit point, do the same thing. Because remember, you're not taking your signals based off the option, you're taking your signals based off of what the underlying issue is doing. So if the underlying issue is telling you to move your stop to unchanged, you realize that you have to follow and track that. If the stock gets back to unchanged, then you sell your option, regardless of where the price is, okay? So it's just whatever the rules are you would be doing with the underlying issue, you apply them to an option. It's up to you. But then remember, once again, there is no systematic way to trade this. If you through paper trading or through applying the process and you find a better way that meets your needs while applying our consistent rules, that's fine. It's up to you. There's no right or wrong way to apply this, okay? Next question, Michael asks, the slope. How important do you consider the slope of the 50-period moving average? Going long should always slope up before entering. That's a great question, Michael. Once again, although there is no right or wrong way to apply the 50-period, we always suggest to all of our students, especially our beginning students, to look for strong upward sloping moving averages if you have a buy setup. And if you have a sell setup, strong downward sloping, because this is the market. Remember, once again, it's not some guy in a chat room, it's not some guy on TV, it's not even some guy on a webinar. It's the market telling you that there's some strong volatility, there's some strong movement, because the slope is very steep. And so that, at times, remember, not guaranteed, but at times will help you with your trade going in your direction. But after you get enough experience, after you've paper traded or traded for a while, we have many students that say, Steve, I kind of know what I'm looking for, and I used to use these strong upward or downward sloping markets, but I don't need that anymore. I can apply whenever I want. So it's up to you. As we stated, we don't want to come up with a systematic way to trade, because that will, in our opinion, guarantee failure. We give you all these different variables and different options and different ways to trade, and then help you design a way to meet your needs, okay? Sarah asks, hello Sarah, she's a student of ours. She asks, when evaluating profit target before entering the trade, should one look at short-term highs or lows? Once again, it's up to you. I don't believe it's in our particular strategies all the time, but one technique which we have talked about before is if you're trading some type of a pullback, which means that you're in an overall uptrend, let's say, and the stock or the future has sold off or descended, and you're buying towards the lows of that sell-off in an overall uptrend, many times price will come back up to retest those short-term old highs. That's one way to exit, okay? Or you can use the pet D and stay in the trade until it reverses its color. So that's one way. Once again, I hate to sound like a broken record, but there is no right or wrong way to trade this. It's up to you, okay? Next question, do you advise to trade at market opening time? I know a lot of people, to answer this question, a lot of people say you should always wait for a good half hour or an hour to trade before you enter, because that way the dust has settled, and so many people are trying to get in and out, and all the big traders and the big institutions, so a lot of times it's best to wait. That's personal choice. Once again, I'm sounding like a broken record. When I traded this morning, I traded the first 10 minutes of the day. Okay. So I had a profit. Now, that's because I'm okay with trading that way. Now, some of our other students will say, no, Steve, I like to wait for the first hour, so I won't trade until at least a half hour or an hour has traded. That's fine. Once again, you see how all these questions are structured around basically saying, what do I do? That's the way we've been taught. We've all been taught to ask, do I use the old high to get out? What about the slope of the moving average? Do I use that? Or what about the first hour? Do I trade then? Because that's how we're all trained, myself included. At specialist trading, we want to give you all these variables and say, paper trade for a while, see what works for you, because ultimately that's the only thing that will guarantee success. Not having someone say, never trade the first hour, or never trade a 5-minute time frame, or never trade these time frames or periods or this market. I mean, that's silly. We have tons of students who say, Steve, I trade this market, I've had nothing but success. We have other traders who say, Steve, I just can't trade that market, I don't have any success. That's fine, then don't trade it. There's no right or wrong answer. The only wrong answer is when you try to mimic a trader. Unfortunately, this is the way most websites and courses are set up. We don't believe in that. We have tons of courses and material that I've accumulated in 40 years, and then we work with you putting it together for you. But it's not just nebulous. We have actual strategies that already have entry points, stop placement, exit points. But then we work with you so that you can make it work to fit you. We give you all these different variables, okay? So I hope this makes sense. I don't want to discredit, and I'm not trying to say like, well, it's up to you and just shun it off. It's really not that. I can't stress enough. And I'll give you an example. When I first started trading, I couldn't make a dime my first couple of years. Even though I was on the floor and had access to all this information, I knew where my book was, I saw what the institutions were doing, I literally could not make ends meet. There were some months where I'd make tons of money, and then the next month I'd give it all back. So after my first year, I was really breaking even or losing because of my costs and my expenses, all right? I really didn't know how much longer I was going to be trading on the floor because I wasn't providing anything. Ultimately, I was lucky enough to come in contact with my mentors who were specialists on the floor. They've been trading for about 40 or 50 years each. And this is what they taught me. The same things I'm teaching all my students are the same things they taught me. And guess what? When I first came around to this way of thinking and I said, okay, I guess what I'm doing is not working, I will trust you guys. I said, listen, why don't you just tell me what you're buying and I'll just do what you guys do. And they said the same thing to me. They said, no, because that won't work, because we're basing our decisions off of our personal preference. Once you leave the floor or once we leave the floor, what are you going to do? You're not going to know what to do. And this, unfortunately, is the way most traders are taught. Come to my website, do exactly what I do or do the signals I give you, and you'll make tons of money. It's silly. We don't believe in that. Or listen to me on TV. I'll tell you what I like in the market, what I don't like in the market. That's the way the markets are set up. But that's why, in our opinion, 80% of all traders fail. It's because you're basically taking yourself out of the game. You've basically said, I have no idea what to do. I'm not good enough to trust myself, so I'll trust you guys. And that is a recipe for disaster. So what we feel is the opposite. We feel that the only reason you don't know what to do is because you haven't been given the proper information. And this is what we do at Specialist Trading. We're an educational company. We provide you with that information that I've accumulated in 40 years. The same things that have sustained my trading, hopefully will be able to sustain your trading so that you don't have some fly-by-night system that works one year and then goes in the tank the next. You'll be able to have sound information that can sustain you, that can help you be consistent for the next 10, 20, 30 years down the road, the same way as it has sustained me, okay? So in closing, I really hope you take advantage of this. If you have any questions, contact Pro Trader Strategies. There's no pushy sales guys there. They're trading consultants. They will be happy to answer any question you have about payment plans or platforms you can apply this to, and they'll be happy to work with you in structuring something, okay? In closing, I want to say thank you so much for taking time out of your Wednesday to come hear me give you this webinar, and I really look forward to all of you being consistent in the future and most likely becoming students of mine at Specialist Trading. Thank you so much. I'll see you next time. Bye-bye.